Warren Buffett has famously said that diversification is a protection against ignorance, and that it makes very little sense for anyone that knows what they're doing. This quote is often used as an argument against diversified investment strategies like low-cost index funds, but the thing is, Warren Buffett was probably not talking about you when he referred to people who know what they're doing. I'm Ben Felix, portfolio manager at PWL Capital, and I'm going to tell you why investment hubris can cost you in the long run. This Buffett quote is a common response when I mention that index funds are sensible investments for most people. Any investor engaging in stock selection or market timing presumably thinks that they do know what they're doing. Otherwise, they would be buying and holding a low-cost portfolio of index funds. But if you think that you're included in Buffett's group of people who know what they're doing, I would like to offer up another Buffett quote and some supporting research. In his 2016 letter to shareholders, Buffett explains that while there are, of course, some skilled individuals who are highly likely to outperform the S&P over long stretches, he has identified early on only 10 or so professionals that he expected would accomplish this feat. Buffett does acknowledge that there may be hundreds, perhaps thousands of people out there who can accomplish this feat. But even still, we're talking about a tiny portion of the population. Early on is an important qualifier in Buffett's sentence. It's easy to identify successful investors after the fact, but difficult to know whether their success is repeatable in the future. This is important because attempting to follow in the footsteps of a lucky investor is a fool's errand, for what I hope are obvious reasons. Respectfully, I think it takes a certain amount of hubris to include yourself in the small group of investors, the group that Buffett is referring to, that may be able to beat the market in the long run by selecting securities and timing the market. The cost of that hubris has been quantified in a recent paper titled The Cost of Investment Hubris. The author analytically estimates the cost of stock selection and market timing for investors who believe they possess such skills but actually don't. They find that uninformed market timing reduces risk-adjusted returns by about 1.3% per year, and uninformed stock selection costs around 0.8% per year due to under-diversification, even if as many as 20 stocks are included in the portfolio. Those estimates do not include trading costs and taxes, which can be material, especially considering that overconfident investors tend to trade more, resulting in higher costs and taxes and lower net returns. Even for professional fund managers, those with higher active share, a metric that gauges how different a manager is from their benchmark index and could be used as a proxy for conviction or confidence in their ability to trade successfully, tend to deliver worse performance and more risk. Despite being quoted in support of concentrated portfolios, Buffett has been a strong proponent of index funds. His regular recommendation to people asking for investing advice is a low-cost S&P 500 index fund, which is advice he says most people of modest means do tend to follow, while mega-rich individuals who may feel they deserve something extra in investment advice due to their wealth will tend to seek out more elaborate investment solutions. Unfortunately, many of the supposed benefits of more elaborate asset classes recommended to wealthy investors, including private equity, real estate, and hedge funds, are probably more fairy tale than reality. But as Buffett explains, it would be career suicide for an investment consultant to continuously tell people to buy index funds. Investing can be, and I would argue should be, pretty simple. Owning a low-cost diversified portfolio and sticking with a strategy through good times and bad is a recipe for success. I like to say, somewhat tongue-in-cheek, but also somewhat seriously, that investing has been solved. Despite knowing what the solution looks like, low-cost index funds for most people, lots of people believe they are one of the few who can outperform by picking stocks, timing the market, identifying a successful manager before the fact, or investing in exotic investment strategies targeted at wealthy investors. The reality is that most people will not outperform through this means, and the cost of their investment hubris is likely to be substantial. Thanks for watching. I'm Ben Felix, portfolio manager at PWL Capital. If you enjoyed this video, please share it with someone who has investment hubris.